Welcome everyone to FX Streets. My name is Adam Rosen. I'll be your host for the next 45 minutes or so. Very special thanks for everybody to join us today. We have, as usual, a fun topic to talk about. We're going to talk about the month of July and what we can expect in the month of August. We've certainly had a very tumultuous, volatile month of July so far. I don't think it's quite over, but I certainly would expect a change of events to occur as we phase out of earnings season, which we're in the midst of right now, and moving into a more quiet trading season of August, which is typically one of the most quiet months of the year. This transition from the volatile earnings season in July to the non-volatile, non-earnings season of August is it's a very tricky period of time because we've seen markets really move very quickly, and our idea is, without maybe subconsciously, without even recognizing it, our idea is that maybe it'll continue. That, the euro dollar's gone up this much and it should go up a little bit more, and the pound dollar's done this, so it should do that in the future. We don't know this for sure. However, the reason why I think it's changed is because that old adage in trading, buying the rumor, selling the news. Looking really briefly, there's so much to cover over here. Taking a look really briefly at the following website. This is just from Yahoo Finance. These are the 30 top stocks, or the 30 stocks listed in the Dow Jones Industrial Average. The 30 stocks which make up broad-based, in broad strokes, the U.S. economy. Those include Alcoa, American Express, Boeing, Bank of America, Caterpillar, etc. It's the 30 largest stocks. Now, those stocks, because they represent such a large amount of the U.S. economy, tend to move the market. The Dow Jones Industrial Average and the stock market, S&P 500, Russell 2000, etc., tend to really move the market to a great degree. However, once these companies do report their earnings, the news is out. And like you say, buying the rumor, selling the news. If I bought Alcoa based on the expectation it was going to have good earnings, well, their earnings, I believe, actually were good. Once the news is out, really not a lot of reason to buy the stock anymore. And we may sell the stock, take profits. We may just not buy it anymore. But that transition from activity to lack of activity is a reason why markets really, really slow down. Now, the same holds true in the foreign exchange market. Certainly moves that occur in the stock market have a direct impact to the foreign exchange market, but there's also very news-specific or currency-specific pieces of news that occur in July that maybe do not occur in August, and they're not going to have the same kind of effect. Let me show you, by the way, what I think I've just discovered in preparing for this webinar from FX Street's own calendar. I'll give everyone the link. If you go to the FX Street website, go to the fundamentals and economic calendar. I just sent everyone the link, by the way. Very cool little features that I just discovered in preparing for this webinar. You can enter the start date and the end date to all the different dates that you want to see the economic numbers. But more importantly than that, if you click on Advanced, and we have a little slider here, and we can place a check mark next to any individual nation that we want to see, or any category, such as central bank's employment. I leave all those blanks so it'll include everything. You can also type in the keyword. A little slider at the bottom though. If you move that slider all the way to the right, what it does, from what I understand, is we see exclamation points. And from left to right, the exclamation points indicate how volatile, or the volatility that we could expect from the release of the economic numbers. So the more important the economic number, the more we look to the right. If you were to keep the slider all the way to the left, this would include all the numbers, all the way to the right, only the big, big numbers. Now, once you do so, click the filter button, hide. I hope I'm using this right way. And we have, the results are just the really, really big numbers during the month of July. Now, I'm not going to go through everyone in a lot of detail because time is of the essence. However, just to mention a few of the really big numbers. Well, these are all big numbers that were released during the month of July. But just to mention very, very briefly what occurred during the month of July, 30 seconds or less, we can see, and by the way, green numbers indicate an improvement, red numbers indicate a decrease or, negative result. In the European Monetary Union, the unemployment rate was expected to rise at 10.1%. They say that 10%. Non-farm payrolls dropped more than expected, 125 versus 110. The unemployment rate, that's green because it dropped from 9.8 to 9.5%. Reserve Bank of Australia kept rates unchanged at 4.5%. Consumer Price Index in Switzerland dropped 0.9 to 0.5%. Australian unemployment rate went down. When the unemployment rate goes down, that's a good thing, 5.2 to 5.1. Bank of England kept rates unchanged at 0.5%. European Central Bank kept rates unchanged at 1%. The unemployment rate in Canada dropped to 7.9%. The jobless claims change, I don't necessarily think that's a huge number, but the calendar marks it as such. Increased jobless claims change to 20.8 thousand, 20,800, I assume. The claimant count change stayed unchanged. Bank of Japan kept rates unchanged, 0.1%. PPI in the U.S. decreased. Consumer Price Index in New Zealand, that decreased. So this shows an unchanged status. Consumer Price Index in the U.S. dropped. The Bank of Canada raised rates 0.755%, but that was as expected. GDP in the UK rose. Those were the big events so far for the month of July that we've had. Now, for the rest of the month of July, Reserve Bank of New Zealand, they're expected to raise rates according to the calendar from 2.75 to 3%. GDP in the U.S. is expected to drop from 2.7 to 2.5%. Now, we could go through all of these different numbers in a lot of detail. We could go through the earnings of the individual 30 biggest stocks, the Dow Jones Industrial Average components, to analyze were they better or worse than expected, and do those numbers represent an improvement or a decrease quarter to quarter or on a month to month basis when applicable. This unfortunately is a lot of work, too much work to take place within a 45-minute webinar. However, a lot easier way to do that is to see simply how the market has reacted. Now, let's get to the chart. Over the course of the month of July, and we have some earnings that are still left over. We're not quite done yet. Earnings season, we say July, it officially kicks off. Remember, Alcoa didn't report their earnings, and Alcoa was the first Dow component to report earnings. I don't believe they reported earnings until either the 10th of July or maybe the 15th of July, the middle of July, basically. And earnings season does extend into usually the first or second week of August. I typically think of earnings season from the second week in July to the second week in August, or the second week in July to the first week in August. Now, if we were to go through, if we had the time to go through all the different earnings and actually analyze what those numbers were they better or worse than expected, we certainly would have a very good idea of how the U.S. economy looked, and we could do the same thing for other economies as well. A much easier way to do so is simply to look at the charts. Here's a monthly chart. Just switch to monthly. The Dow Jones Industrial Average Futures. Take a look at the opening price. That was the first day of July because this is a monthly chart. So every candlestick represents 1 month. For the month of July, the Dow Jones Industrial Average Futures opened at 96.92. Those are the futures. Now, I know we have a few days left in July, but because the webinar is today, let's pretend that the month of July, or better yet, let's pretend that earnings season ends today. It doesn't, but let's pretend it does. Well, we open at 96.92, and the closing price right now for the futures, 10,515, which represents an increase in the Dow Jones Industrial Average Futures, 516 plus 93. That's about 800 some odd points. 800 points, the Dow Jones Industrial Average went to the upside from approximately 9,700 to 10,500. 3 plus 5, about 800 points to the upside. So without really making a thorough investigation as far as what companies reported what earnings, very, very simply, we can say during the month of July, in broad strokes, during earnings season, the Dow Jones Industrial Average, for whatever reason, reacted positively, reacted to the upside. Earnings were probably, I'm guessing, better than expected, and the Dow Jones Industrial Average went up. That's in broad strokes. Now, once the earnings season is over, there's really not a lot of reason to buy the Dow Jones Industrial Average anymore. And that's why I think the Dow Jones Industrial Average may settle down, may stop going up. This is a monthly chart. A daily chart probably show a little bit of a better idea. But we're looking at the possibility of a possible massive head and shoulders pattern. Now, to really zoom out, we can argue that the first shoulder, this is now on the daily chart, the Dow Jones Industrial Average, the first high, first shoulder high, 10,681. That is July 19th. The head, which is the highest high, that's around 11,100 and change. The second shoulder typically comes within very, very close to the high of the first shoulder. First shoulder high again was just below Dow, 10,700 or 10,514 at the moment. So certainly a lot of room for the market to go another 200 points or so to the upside. However, once the earnings season is over, once those big companies, especially in the Dow Jones Special Average and some of those S&P 500 stocks as well, once all those stocks report their earnings and we find ourselves in the month of August, well, there's not a lot of reason to buy the stock market anymore. After all, Alcoa already reported their earnings. Even if we drift outside, if we venture outside the Dow 30 stocks, we can talk about names like Apple Computer. Those numbers are really, really good. Once those companies report their earnings, there's not a lot more reason to buy the stock or the Dow Jones Special Average or the market. Same holds true for foreign exchange. The numbers that we've mentioned, going back to FX Street's calendar. I really love this calendar, by the way. I'm kicking myself. I didn't notice this feature earlier. But we've had the unemployment rate and the non-farm payrolls in the U.S. and the Reserve Bank of Australia interest rate decision. All this news is out already. Now, we do have some more news. But just to give you an idea, if we look at only the big news during the month of July, that's a full couple pages. Take a look at the only big news that we expect for the month of August. Now, we have the month of July. We had a lot of, can't count all these. 3, 5, 9, 11, 15, 18, over 20, I'm guessing 25 pieces of very, very big news. GDP, consumer price index, central bank meetings, etc. Probably 25 different very big pieces of news. How many very big pieces of news do we expect for August? Well, 3. August 5th, the Bank of England interest rate decision. They're expected to keep rates unchanged. Well, we know that over the past 2 meetings, Andrew Sentence, he's one of the members of the Bank of England, he's actually voted to raise rates to 0.75%. He's been outvoted 7-1. Probably, I'm guessing the Bank of England won't raise rates. The Federal Reserve is expected to announce their interest rate decision in the U.S. on August 10th. I'm pretty sure they're not going to raise rates. They're going to keep rates at that 0 to 0.25%. And, U.S. CPI, Consumer Price Index, the previous result is a loss of or a drop of 0.1%. But that's it. We don't really have, remember, Congress and a lot of other government officials across the world, they go on vacation in August. Not a lot of big news. Now, what happens when we go from a month jam-packed with a lot of really big pieces of news like July, plus earnings season, plus all those companies that report earnings? What happens when we go from that really volatile news-driven month of July to a month of August where we don't really have any significant pieces of news? Only 3 out of all the different currencies that we follow. And we don't have a lot of reason to buy stocks. And plus, a lot of people are on vacation, so less people pressing the buy and sell button. We go from a volatile to a non-volatile state in the foreign exchange market. A very quiet state in the foreign exchange market. And what my own personal theory, this is a little bit my own personal theory intermingled with all this, is that I think what has gone up the most in July may come down a little. And what's gone down the most in July will probably go up a little. Because after all, the foreign exchange market, it's the largest market in the world. And I like to think of these currency pairs as very, very large rubber bands. And when the dollar goes down, 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 and the euro goes up, 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 eventually doesn't mean the dollar fundamentally shouldn't go down. I think it should. I think the euro should also go up. The numbers in the euro actually are starting to look a little bit better. But there's going to be a little bit of a pullback towards the center, a retracement towards the middle. Question is, so will the UK economy be stabilized to grow? I think so. Now, Andrew Sentence, which is that one dissent in the Bank of England, he's actually voted twice now, 2 months in a row, to raise rates. He has, from the Bank of England statements that we've read, he's mentioned that inflationary numbers continue to increase in the UK. Now, I think that there's still a lot of growth issues that are that we need to see. We need to see the GDP numbers. We need to see employment numbers continue to improve as well. But I think that in conjunction with the UK's new focus towards their own debt, their own deficit, with cutting costs, I think that's the right way to go. It's my own personal economic theory. I think the UK, the way they're doing it, I think that's the right way to go. UK really didn't get in as much trouble as a lot of places, a lot of nations in the Eurozone, like Spain, Portugal, France, excluding Germany, Ireland, Italy, much, Greece, I think the UK fared much better than that. Actually surprising, considering so many financial companies come from the UK. But yes, to answer your question, I think that things will get better. I think that you'll see the Bank of England raise rates before the European Central Bank. And I think that maybe you'll see the Bank of England raise rates before the US. Now, why doesn't the UK join, I assume you're referring to, Greg, the EU, the European Union, or the Euro? If that is your question. Well, there's a lot of reasons. For those of you, anybody in the webinar, right now from the UK, and, please feel free to type in why you believe the UK should not join the EU. I have my opinion. I think that things are fine the way they are. I think that there's a lot of reasons. Some say it's because we want to keep our own currency, or I'm not going to be, but if I was, I would say we would want to keep our own currency. We want to keep our own economy a little bit separate. I think the UK is a lot more established than a lot of other economies prior to the euro currency. Let's get to the charts. Now, I don't mean to start a war over here. It is a little bit below the question at times, but there are good reasons. Now, what I want to do, and I want to go through a little bit of an exercise. There's so much to cover, so excuse me if I talk fast. But what I want to go through is monthly charts. The same way that we looked at the Dow Jones Industrial Average. Remember, and we said, okay, how much did Dow Jones Industrial Average move from the open to the close, assuming the month of July closed today, or earnings season closed today? I know that July is not over. Earnings season is not over. However, for the sake of argument, let's assume that it is. Now, we're going to go through and we're going to see what is how much have these currency pairs moved up or down from July 1st until today. And we're going to go through and we're going to try to, and there's a number of different ways we can do this. We can do this according to, percentage moves, certainly a lot of different ways. But just on a pip-to-pip basis. Now, by the way, these comments are great, by the way. If the UK, by the way, one of the arguments is if the UK does join the EU, in essence, it would be tied down to Spain, Portugal, Greece, and other nations. And that is a big argument made by Germany. That Germany, I remember when the EU was first created and the European currency was first created, the euro was first created, and Germany arguably is probably one of the strongest economic nations, strongest economies in the euro zone, while nations like Portugal are on the other side of the spectrum. Now, in order for Germany and Portugal to use the same currency, well, we have to devalue to an extent the Deutschmark, which was the currency prior to the euro, and we would have to increase the value of the Portuguese escudo, that was the currency prior to the euro, bringing everybody into the middle. There's too much variation in economic development, these comments say, between Northern Europe and Southern Europe as well. A lot of different reasons. Let's take a look at the low to high, the improvement or the move down in the different monthly charts. Again, assuming that, starting from the month of July, assuming the month ended today. Euro dollar opened at 122.31. I'm going to approximate for the sake of time. 122.31 to 130.30, about 800 pips to the upside. 800 pips to the upside. Pound dollar during the month of July, 149.39, close 150.62. Again, I'm approximating. Excuse me please forgive me if these numbers are not accurate. Now a positive sign means we move to the upside, so 149 to 155. Okay, so that's around 600 points to the upside. Color. Dollar yen, not a big mover. Opened 88.40, closed 87.40 to dollar yen, minus 100 pips. I think you get where I'm going with this, right? Dollar Swissy, 107, let's say 108, so well, that's actually pretty easy. 107.70, 105.70, 200 pips to the downside. Whoops, that microphone just went off. Okay. Dollar CAD opened month of July 106.30, closed 102. Approximate again 106 to 102 minus 400. Dollar CAD minus 400. I think everyone can see where I'm going with this. Aussie dollar, big mover this month. Open 84.05, 90, 40. Okay, so plus 600 Aussie dollar. Aussie dollar plus 600. Kiwi dollar, another big mover this month. 68.50, 73.500. That actually means a lot. We'll talk about Kiwi dollar plus 500. Okay. So we see, and these are just what we've done is just very simply compare the different currencies against the US dollar. Now, if we really want to do a very thorough job, we would compare, these currencies against every other currency every which way. We could certainly go through the yen crosses. Then we could take the Swiss franc and compare it to the dollar and the 7 other currencies and the pound, etc. However, first comparing to the US dollar, and I am aware that the US dollar does move also, but let's just use the US dollar because it's the basis for these major pairs as a common denominator. Which currency pair has moved the most? A euro dollar, 800 pips to the upside. And that tells us that the euro, from strongest to weakest, let's actually type this in here, strongest to weakest. Well, I would say arguably the euro is probably the first because the euro dollar moved 800 pips and to the upside. We could also say the pound, and then we would say the Aussie. That's probably tied for second place. New Zealand dollar against US dollar moves up 500. Now, remember when we talk about currency pairs like the dollar Swissy, dollar CAD, dollar yen, we have to invert it, meaning when the dollar yen goes down 100 pips, which it did during the month of July, we think about it in terms of the yen dollar, in terms of making an equal comparison. So the dollar CAD went down 400 pips, which means that the CAD went up 400 pips against the dollar. So the CAD would be next. 400, then the Swissy, and then the yen. Okay. So strongest to weakest against the dollar during the month of July, just from going through our monthly charts. Euro's been the strongest, followed by the pound and the Aussie, probably tied for second place, followed by the Kiwi, then the CAD, then the Swissy, then the yen. So we can assume the dollar went down during the month of July, and the euro moved up the most. Now, with that said, what do I think will happen? Well, I think, again, what will happen is what has moved up the most may have the tendency to come back down. It looks like the euro is the strongest currency. From July 1st through today, the euro's been the strongest. What's been the weakest? Well, we could say the dollar. Actually, let's go through the yen crosses also while we have just a few extra seconds to spare on this exercise. I think it's important though. Let's go through against the yen crosses. Okay. Let's take a look at the euro yen. Euro yen, okay, the low, we're taking open to close. 108 to 1, let's say almost 114. That's what 600 pips. Euro yen. Open to close. That's not bad at all. Cable yen, and cable yen is usually more volatile than euro yen. Open 132, close at 136. The cable yen, what did I say? 132, 136, 400 pips. And these are, by the way, both moves to the upside. Plus sign indicates that. Aussie yen from the open 74.30, 79, about 500 pips. Aussie yen, 500 pips. I'm just approximating. Kiwi yen, big mover. Kiwi yen's not usually a big mover, and it is this month. 60.54 to 64.30. So we're talking about 400 pips to the upside. Kiwi yen, 400 pips to the upside. CAD yen, monthly charts, not a lot. CAD's not been as strong as I thought. 83 to 85, that's 200. CAD yen, 200 to the upside. That's about it. Okay. So, according to the yen crosses, and this just gives it a little bit more of a fair comparison. What's been the strongest currency against the yen? Excuse me. Euro. That's the strongest of the weakest, by the way. Followed by the Aussie, followed by the pound and the Kiwi, tied to third place, followed by the CAD, and we can go on and on. So, against the yen and against the dollar, the euro is the strongest currency. The second strongest, well, we could say against the dollar, it was the pound and the Aussie. Against the yen, it was the Aussie and the pound and the Kiwi. So the real, let's classify it this way. Okay, so we can say July's winners, let's spell July correctly. July winners, winning currencies, we should say, in this order: euro, Aussie, pound. Those are the strongest currencies in the month of July. I think those are going to come down. What were the weakest? July's losers. July's losers just mean the currencies went down a lot. Arguably the dollar and the yen. Question is, no more strengthening yen. We will wait for Japanese intervention. Well, it's a great question. We spoke about this during the last webinar. I believe it was during the last webinar. When the dollar yen, let's go back to the dollar yen chart for a second. When the dollar yen, where's my dollar yen? There we go. When the dollar yen gets down below the 90 level, down near 85, we're currently at 87.96. Now, or 87.50, I should say. Remember, the Bank of Japan, or the Japanese economy, that's an export-driven economy. It's an economy that benefits by the greater amount of goods and services, especially goods, automobiles, consumer electronics, etc. The greater amount of goods that Japan is able to export overseas, the better for their economy. Different than the U.S. economy, different than the European economy to an extent, because the U.S. economy and the European economy is a capital investment type of economy. The U.S. economy does better with foreign capital that's invested into the U.S. Invest into our bond market, invest into our stock market, invest into our housing market, etc. Not the case in Japan. Japan's number one priority, let's sell the greatest amount of goods and services, especially goods. Well, when the dollar yen gets down near 85, it costs, or when we want to buy goods or services from Japan, we buy with $1, 85 Japanese yen. But when the dollar yen was at 100 or 120, we were able to buy 100 or 120 Japanese yen for every dollar, and we can make the same comparison with the euro yen, pound yen, etc. Therefore, the lower the dollar yen is and the lower the euro yen is, the more expensive it is for us as U.S. and European consumers to buy Japanese goods. Therefore, Japan's economy suffers. Japan and the Bank of Japan likes the dollar yen to go up. It does not like it to see it down near 85.90. Now, there's always a little bit of a risk and anticipation of intervention when the dollar yen gets down near the 8,500 level. What is intervention? When the Bank of Japan steps into the market, into the foreign exchange market at a very unforeseen point in the day, and they go out and they buy a ton of U.S. dollars and they sell a ton of Japanese yen, millions and gazillions of dollars in yen, in order to move the currency market up and to shake those shorts out and to really encourage the market to turn around and go up. And, those of us that want to sell short the dollar yen or the euro yen, it's not a good feeling to sell short. And all of a sudden, when we least expect it, when there's really no news, all of a sudden the dollar yen goes up 100 pips all at once. So that risk of intervention and that fear of intervention is why the dollar yen gets down near 85, and we see it seem to pause. Take a look at the upside down head and shoulders. The lowest low we saw was down near 84.79. Lately, we've seen, if you take a look at the yen crosses, not so much the dollar yen, take a look at the euro yen. Big move up. Pound yen's going up. Aussie yen, so these are monthly charts, so it really doesn't do it justice. Aussie yen, Kiwi yen, CAD yen, we're going up. The more that these yen crosses go up, the less of a risk of intervention. So I think you can take I think you could take the risk of intervention off the table as long as these yen crosses continue to go up. But if the CAD yen breaks monthly lows, breaks below 81.58, that's this month's low. If the Kiwi yen breaks below 59.53, which is this month's low, or the Aussie yen with this month's low at 72.66, which by the way is also a 3-month low or 2-month low, cable yen, etc. If we break those lows, I'd say you put the risk and the fear of intervention back on the table. But lately, we've seen a big move up in these yen crosses. Euro yen certainly is one of them. I think that there's not a lot of risk of intervention now. Bank of Japan doesn't need to do so if things are going their way. And it seems, at least for the time being, things going this way. But getting back to the premise of this exercise, what were the strongest currencies during the month of July? The euro, the Aussie, and the pound. What were the weaker currencies? The dollar and the yen. So you put those together, what currency pairs have moved up the most this month? Euro dollar, euro yen, Aussie dollar, Aussie yen, pound dollar, pound yen. I think once we get through earnings season, once we see the last of this big economic news, and as we enter the month of August and more of us go on vacation and there's less of a reason to trade, I think you're going to see some of these markets pull back. Now, I think these markets will pull back at very logical levels. In fact, let's go to the daily charts now, see if we can surmise. Let's start with the yen crosses. They seem to be very interesting. Let's go to a daily chart now with the euro yen, and let's try to surmise where these pullbacks might occur. Well, euro yen's tricky. 113.94. We hit highs at 114.11 earlier today. Those are levels, by the way, in the euro yen we have not touched going back to mid-May. There's a downturning resistance line all the way up at 121 on the euro yen. I don't know necessarily if it's going to get all the way up there. It's certainly foreseeable it could because, well, yen crosses are a fast-moving currency pair. However, we can also draw the Fibonacci lines near the 127.92 highs of April 4th all the way down to these very big lows. These are also possible reversal points. 115 is the 38.2% Fibonacci retracement level. 50% stands at 117.50, the 61.8 at 120. These are also all possible reversal points in the euro yen. I think for the time being, whoops, where'd my charts go? For the time being, trend is your friend. Trend is to the upside. But as we make that transition from the volatile month of July, earnings season, a lot of economic data, a lot of participation, high volume, and we make that transition to that low volume, low volatility, lack of news, lack of earnings, August, I think you'll see these yen crosses turn. I don't know necessarily if we're going to turn all the way to the downside, but we're going to stop going up, and I think we're going to settle back towards the center. That's the euro yen. Let's go to the daily chart cable yen and take our best crack. And you'll notice, by the way, yen crosses today are certainly trying to do something pretty historic. 136.35, hitting highs at 136.39 on cable yen. Now, the highest high prior to that is 136.39 on June the 3rd. That's the highest high. Whoops, I think we just had some news. Cable yen downtrending resistance emerges near 142.25. Now, we can also draw Fibonacci lines and try to surmise where. 50%, by the way, is basically right where we are here. If we continue higher, cable yen 61.8% is at 139. I think we could get up to 139. Cable yen's a fast-moving currency pair. And again, remember, downtrending resistance all the way to 142. Take a look at the Aussie yen. Aussie yen at 79.35. Really big move today on the yen cross. We're hitting levels now on Aussie yen 79.35 we've not seen since mid-June. Now, former support could become new resistance. Take a look near the 80 figure, and above that, we have to look all the way up to 84. Almost, those are highs of June 21st, almost 8100. Aussie, and I would say the first suspect resistance could emerge between 80 to 8100, or 79.30, at least a couple more, 100 more pips to go. Daily chart, Kiwi yen, 64.60, crossing above highs of July 14th, and in fact, now touching levels we've not seen again since June 21st. The next big high in the Kiwi yen, 65.28. Those are highs of June 21st. Above that, resistance emerges. That's all the way to the 6,900 level. And of course, what do we forget? The CAD yen gave us almost a perfect entry on the way down. I sort of kicked myself. I wasn't able to catch more of this. 85.34 in CAD yen, downtrending resistance. could emerge at the 8760 level, and then above that, very big highs near 9400. Point being, these yen crosses have a lot more to go. Remember, when the yen crosses move, they tend to, over time, typically have a very strong correlation with stock markets like the Dow Jones Industrial Average. Remember, 10,518 are the futures, hitting highs today at 519, 1 point off the high. 10,531 are the highs of June 21st, but if we cross above that, remember our head and shoulders neckline, we suspect the resistance may emerge just below 10,700. So if I were to guess, for the remainder of earnings season, for the remainder of the month of July, and more accurately, for the remainder of the really volatile markets that we know, I would guess the Dow Jones Industrial Average, without knowing anything else, could continue to go up maybe a few hundred more points. My target for the head and shoulders neckline is around 10,700. And those yen crosses, those possible resistance lines we just identified, I think those could certainly still continue higher. The immediate trend is certainly to the upside. Gold breaking new lows, crude oil trying to break out, 79.50, and very big highs, 79.89. I think if crude oil gets above 80, you could see a retest maybe the 87, 85 level. It's also possible head and shoulders near 85. That's important to know. Questions, comments, concerns, by the way. No, I've gone through a lot in a relatively short amount of time. But to go back and sort of put this in as simple terms as possible. July represents a very volatile month sandwiched in between two quiet months, June and August. July is volatile because we have earnings season. It's actually one of the most volatile months of the year. We also have a lot of economic news. A lot of economic news that these governments like to get out of the way before we go on vacation in August. So they spit out all these big economic numbers, which we took a look at the FX Street calendar. And most of this news is actually pretty much done. We have the Reserve Bank of New Zealand interest rate decision tomorrow. We have GDP numbers on the 30th of July. And then we only have 3 numbers in the month of August to contend with. So we logically expect a tremendous amount of volatility and volume really slow down once we get into the second week of August, and possible, I wouldn't say full reversals, but percentage reversals at least. Now, long term, I happen to think stock markets go down and these yen crosses are due for a big retracement. That's left to be seen though. However, I think that once we get through the end of this really news-driven volatile market, you can see pullbacks and you can see what was the strongest, like the euro and the Aussie and the pound, maybe sell back. And what was the weakest, like the dollar and the yen, maybe those will start to rally as well. So I think you could see some reversals. Please make note of those major trend lines. Now, while we have a few more minutes to go, if anybody has any questions, by the way, please don't hesitate. Let's take a look at some of our other currency pairs. Just again, euro dollar has been very strong. Downtrending resistance is near 147 or 130 right now. Will the euro dollar go up 1,700 pips in the next 2 weeks? I don't know if euro dollar is going to go that much. We can draw Fibonacci lines down to surmise where it may end up though. 38.2% at 131.75, 50% near 134.50, 61.8% at 139.50, etc. Pound dollar. Let's go to a daily chart. Pound dollar just broke the highs, by the way, that we have not seen since February of this year. That's huge. Pound dollar, former support could become new resistance at 160, 150. We're at 155. That's another 500 points to go. That's a logical turning spot. Dollar Swissy, which is typically an inverted picture of the euro dollar. Not really lately. Dollar Swissy, little bit, dollar yen, dollar Swissy, Swiss yen, a little bit of a different animal. Because the dollar, the yen, and the Swissy, low yielding currencies, but also those currencies that act as a flight to safety. So when the stock markets go down, we buy the dollar and we buy the yen and we buy the Swissy. That's why I don't think you're going to see dollar Swissy move as much as other currency pairs like the euro dollar or the pound dollar. Because, right now stock markets are going up and the economy at least feels like it's improving, at least as, according to the stock market. Therefore, we would sell the dollar and we sell the Swissy. Right now, we're selling a little bit more Swissies than dollars. The dollar Swissy 105.92. We continue higher. Major resistance, major head and shoulders. Very interesting level near 109. Dollar CAD is probably one of the more range-bound markets. Very difficult to chart the dollar CAD. 102.78 currently, upside down, massive head and shoulders. I would think the lowest low is head and shoulders, and that goes down to 102 level. We're 102.77 right now, so a little more room to go. Difficult to track the dollar candle. Aussie dollar a little bit more clear cut because it has really been so directional. 90.47, almost exactly the projected resistance level at this point. Therefore, if we really continue higher, look to those very big double top highs near 9,400. Aussie's already moved a lot though. So is the Kiwi dollar. We're at 73.69 at the moment. Kiwi dollar, by the way, breaking the levels. Look at the Kiwi dollar. Breaking the levels we haven't seen in a long time. Actually going back to January of this year. The next very big high, 74.41. Those are highs of January 14th. That is a suspect resistance level to contend with. That's the highs of January. If not, we have to look much, much higher, back to the highs of October of last year. Questions, comments, concerns. So I think that we've had certainly very big moves. If we've missed these moves, do not feel bad. It always kind of hurts me that, wow, I missed the Euro CAD and the pound to Aussie. There's always a trend that does exist. We can only do our best to, approach a market from a fundamental point of view, identify what will most likely be the next significant trend, then, find the appropriate currency pair, putting the strongest currency against what we think is going to be the weakest currency. Always trade with the trend. Look for those proper signals, use proper money management, all those other great things to get in the trade. Short term, long term, doesn't matter. And do our best to put the probabilities in our favor. It's not always going to work out, or we're not always going to catch every trade. In fact, we're probably going to miss more than we catch. That's okay though, because there's always another trade. There's always another trend that will develop. And as the euro dollar and the Kiwi dollar calm down, we may see a new trend develop with the euro pound. Just as we were speaking about earlier, when we talk about, the anticipation that the Bank of England will raise rates before the European Central Bank. In fact, I happen to believe, I'll give you my opinion. I think the Bank of England will raise rates before the European Central Bank. If you don't mind typing in, which central bank do you think will raise rates first? Now, you can please feel free to disagree with me. I'm guessing most will probably vote that you believe the Bank of England will raise rates, probably because I've said it. However, if you do believe that the European Central Bank will raise rates before the UK, please feel free to do so. In fact, let's put this question in a whole different light. The Bank of Canada just raised rates for the second time. Reserve Bank of Australia just paused in raising rates. A lot of us expect the Reserve Bank of New Zealand to raise rates. Very, very few of us expect the U.S. or the Eurozone to raise rates, or Swiss National Bank, the SNB, to raise rates, or of course Bank of Japan. I happen to think the next central bank to raise rates could be the Reserve Bank of New Zealand. Probably because the consensus, the market consensus. So if I think the Reserve Bank of New Zealand is the first to raise rates and then followed by, I don't know, maybe the Bank of England, but I would probably say the Bank of Canada before that. Maybe the Reserve Bank of Australia. Remember, what's good for the world is good for Australia. I'd say the least likely to raise rates, well, Japan, obviously. They don't like have high rates. Followed by probably the U.S., Eurozone, Swiss National Bank on the other side of the spectrum. So we put those currencies like the New Zealand dollar and the Aussie dollar and the Canadian dollar against those currencies that we do not think they're going to raise rates. And that's how we very simply develop a long-term trade idea as far as currency pair. Question is, if they do, New Zealand will go high for 3 days at least. Well, Ricardo, it's a great question. It really does depend on how the market behaves prior to the news. A lot of times, I think we've covered this in some of our previous webinars, a lot of times we'll see the market move a lot before the central bank makes a decision. And by the time the central bank makes a decision, it's too late. Let's try to find a good example. CAD yen is a good example. Remember, Bank of Canada raised rates for the first time in many, many years, the beginning of June. Let's draw a line at the beginning of June. I don't remember the exact date. I remember it was in the first week of June. Let's make this line as big as possible. I'll make it as bright as possible. If I had bought the Canadian dollar against the Japanese yen, this is the daily chart, the CAD yen. If I had bought this was June 1st, by the way, the closing price for the CAD yen, on this date was 86.26. If I bought the CAD yen, I would have lost money and the Bank of Canada had raised rates, not June 1st, but very, very close to June 1st, I would have lost money if I bought it based on the Bank of Canada raising rates for the first time in years. However, take a look at where the CAD yen was, 9,400 back the end of April, beginning of May. Above 90, okay? So the economic data the Bank of Canada watched told us that the Bank of Canada may raise rates in June, but because the economic data was released a month to 2 months before Bank of Canada decision June, the time to buy the CAD yen was before the Bank of Canada raised rates. Again, buying a rumor, selling the news. In other words, if you think the Reserve Bank of New Zealand is going to raise rates, I would not wait until that actual meeting to buy the Kiwi. I would want to buy it before, when the bad news in New Zealand turns to good news. And this is on a macro or micro level. On a shorter term basis, we apply something called our 15-minute cooling off period strategy, where we basically measure the market's reaction to the Reserve Bank of New Zealand interest rate decision on that date, the next day or so. And then based on the fact, and for those of you that have joined me during previous webinars, I'm sure this sounds familiar. Basically, you wait 15 minutes after the release of the number, and then you wait to see which way the market breaks out, to the upside or downside. So watch a Kiwi yen, and you can watch a Kiwi dollar based on, the date that the Reserve Bank of New Zealand announces their interest rate decision. But I would not simply, blindly buy the Kiwi yen or Kiwi dollar based on the fact that the Reserve Bank of New Zealand has raised rates, because maybe that's already factored into the market. As traders say, it's already baked into the cake. 9:17 a.m. Eastern. I'm officially out of time. If you want to contact me directly, by the way, please feel free to do so. www.forexlounge.com. I want to thank you all very much for joining us. Please check FX Street's calendar, by the way, because we'll be back next month with much, much more. I want to thank you all very much for joining us. Very special thanks to FX Street. We wish you all a great day, all profitable trades, and we look forward to seeing you.